Good morning, good afternoon, good evening, wherever you are, whatever time of day it is. Welcome to today's Grey Market Blast Morning Blast.
Oh,
Myself and the awesome Michael Brown. Yes, I am finally back. Yes, we are finally back. I apologise for being away. I am also meant to be going away next week, so we'll see how we deal with that. But regardless, let's get the legals out of the way and crack on with today's show. As usual, nothing discussed on this basis session constitutes trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed that of the marvellous, the magnificent with a capital M, Mr. Michael Brown. How are you, my dear friend?
very good morning to you, Judith. Good morning, everyone. I was going to make a gag saying it's been so long since we did one of these, we've probably forgotten how to do it. But then, given that you fluffed your opening lines, I don't really need to go down that route anymore.
Yeah, I've got absolutely zero defence there. Yeah, well played. Well, look, no one's more interested to find out what happened yesterday than me. so crack on.
Well, what I'm not going to do is recap the last week, given that that's how long we've been
Boo.
away. But I can tell you what happened yesterday and overnight, actually, because there's quite a lot to get
Yes.
through. Markets starting the fresh trading day with risk appetite on the front foot. S&P futures up by about 1.5%, briefly poking their head above the 6,000 mark earlier on. A bit of a sell-off across the Treasury curve as well. The 30-year yield back above 5%, the 10-year yield back above 4.5%, and some decent demand for the dollar coming through overnight as well, with the dollar index back north of the 100 mark. And this all comes after some trade news overnight. The Court of International Trade in Manhattan, who I'd wager no one had really ever heard of or paid much attention to
Well,
until
you
about
say this.
midnight London time.
You say this. It appears to me that everyone on Twitter is now an expert.
Oh, naturally, and they were an expert in geopolitics or something else last week, but
Yeah.
now they've pivoted rapidly to their new specialist subject. What I will do, actually, I will give credit, not that they're going to care, but to the JP Morgan trading desk, because they were the only people on the sell side who I actually saw even mention that this court case was going on. So I doff my hat to
Oh,
Andrew Tyler and his colleagues.
this wasn't. Oh no, sorry, no, don't worry. I remember when I was on the plane. Funny enough, seeing you type about section something 819 or something about the big
Oh
beautiful
no,
bill,
that's
but that's
something else.
completely unrelated. Sorry, I'll get back in my box.
You do that. Anyway, this court that no one's ever heard of, but everyone's now an expert in, have ruled against President Trump on some of his tariffs. Now, I don't want to go into the weeds of the legal system in the United States, but President Trump's tariffs that he's unveiled since the start of his term have been implemented using a whole different range of legal powers in the United States. But the bulk of these tariffs, including the measures ostensibly regarding fentanyl, the tariffs targeting China, and also the quote-unquote reciprocal tariffs that were announced on Liberation Day, these have all been enacted using something called the IEEPA. Now, because
Ah,
I was going to say, and also because I'm quite foolish, I forgot to actually write what that acronym means. So you're going to have to go
answers
and
on
work that out
postcard, please.
yourself. Well, Zach can WhatsApp me in a second and tell me. But effectively, this ruling has meant that any tariffs that were imposed under this presidential power, this executive presidential power, have been blocked. Now, according to the boffins over at Goldman Sachs, this equates to about 7 percentage points of the tariff increases that have been put in place at the start of the year. And what's interesting is that for the time being, at least, these measures have been not only permanently blocked, unless an appeals court overturns the ruling, but also the Court of International Trade have said that they need to be unwound within the next 10 days. So the timescales are relatively tight on this front.
Right.
Now, there are a few caveats here, of course. The first is that, as I said, appeals courts, Trump is obviously going to appeal this decision. In fact, the Trump administration have already said that they will appeal this tariff ruling. The second is that just because the court has said these tariffs are unlawful or unjust, however you want to phrase it, that does not mean that the tariff story is dead in its entirety. As
No.
I alluded to earlier on, There are various other measures by which tariffs can be imposed, various sections of commerce and trade law in the United States. The issue with that is it's just not quite as easy for the Trump administration to impose tariffs under those parts of the law. They may require congressional approval. They may require the Commerce Department to produce reports and investigations into trade practices before tariffs can be put in place. So I think perhaps at the margin, it reduces the risk of this kind of tariff by tweet situation that we had towards the back end of last week with Trump threatening 50% tariffs on the European Union. But it doesn't mean that Trump isn't going to impose tariffs at all. And in
No.
fact, I would be very, very surprised if there aren't a whole host of interns beavering away, morning Henners if he's there, in the Oval
Well,
Office, working out a way basically for Trump to continue doing what he was doing under other parts of trade
yeah.
law in the United
And let's be
States.
honest, this is, if anything, this is just going to embolden Trump to kind of claim it's, it's here, it's kind of the government kind of, well, the the areas of government that aren't controlled by him are trying to fight against him. So be prepared for a lot of probably fiery tweets and Truth Social posts today about this. And as we know with these things, they do move markets. So one for the headline risk,
Yeah,
definitely.
absolutely. I think it's a classic for Trump from a sort of political perspective. It very much, very much plays into that whole kind of them and us or them versus
Yes,
us
absolutely.
narrative that people like Trump are absolutely going to lap up in spades. So
Yeah,
certainly a positive, and it's understandable why markets have reacted as they have. Does it mean trade is over? Absolutely not.
no.
Moving on from that, which has obviously stolen a hell of a lot of attention, a couple of other trade headlines worth noting. The first is that the EU trade chief Šefčovič is going to have a call with Commerce Secretary Lutnick and US Trade Representative Greer a little bit later on today. Boy, to be a fly on the wall in that call after the news that we've had out of the courts overnight. Apparently, the three have also agreed to hold calls every other day. So it seems that those three are going to be speaking more often than me and you, Ryan, at this point.
Impossible.
The final bit on trade. The FT reporting last night that President Trump has ordered chip software designers in the United States to stop sales to China. This is according to several people familiar with the matter. The US has sent a directive to these companies, which includes Siemens, Synopsys and Cadence, basically telling them to stop supplying their chips to China. On the subject of chips, it is, of course, we need to cover the earnings from NVIDIA last night. But before we do, I've got a bone to pick with someone at NVIDIA, because whoever the hell typed their press release, please, just go and get another job at this point. The fact that you can get your gross margin wrong by 10% and your EPS figure wrong by 15 cents when you're the biggest company and the biggest report of earnings season is, quite frankly, shambolic. As for the correct numbers, when we eventually got them, NVIDIA did deliver top and bottom line beats in the first quarter, with EPS coming in at 96 cents, above the estimate of 93 cents, and revenues coming in at 44.1 billion, above the estimate of 43.3 billion. Margins were at 71.3%, broadly in line, if not slightly above street expectations. While data center revenue was also above expectations as well. NVIDIA expecting second quarter revenue to be around $45 billion, plus or minus 2%. Presumably that variance depends on how many orders our good friend Tom Talks Cars places, and that guidance was also broadly in line with where the street was expecting it to fall. NVIDIA traded about 4% higher after hours yesterday in what was a delayed reaction, because obviously we were all looking at the wrong numbers to start with. Nevertheless, although that is a sizable move, it is worth bearing in mind that options tied to the stock had priced a move of about 7% plus or minus in the 24 hours after the print. So a decent move, but only half of what the market had been pricing. In terms of other, whoa, Jesus! As I
Oh,
almost dropped. Sorry, that was me almost dropping
oh,
my phone. Forgive me for that.
oh.
It's all descending into shambles here. In terms of other bits and bobs from yesterday, we did have a decent 5-year Treasury auction out of the United States, stopping through the when issued by 0.4 basis points. That followed a decent 2-year sale on Tuesday and comes ahead of the 7-year auction a little bit later on today. We also have minutes from the May FOMC meeting. Of course, these are are even more stale than usual, given that the May FOMC meeting came just before the pause and truce was announced between the US and China in terms of tariffs. Nevertheless, the Fed minutes noted that a cautious approach remains appropriate amid economic uncertainty, and that policy is well positioned to wait for clarity on the economic outlook, with Fed officials seeing the potential for, quote, difficult trade-offs lying in the months ahead. Very much in line with recent rhetoric that we have heard from the FOMC, and certainly nothing market moving in those minutes. Sticking with central banking, a few headlines out of the ECB, which seems to be rapidly descending into an even more shambolic state than it was before. The first is the FT reporting yesterday that President Lagarde has been discussing cutting short her term as ECB president in order to take over at the helm of the World Economic Forum. Apparently, Lagarde has been holding discussions as recently as early April between herself and a chap called Klaus Schwab, who is the founder and former head of the WEF, to discuss how they may transition to her leadership of the forum. Apparently, these talks were so advanced that the WEF have even reserved her an apartment in Davos. So it's not like they're just sort of chatting informally in the pub about this. Of course, Lagarde's term at the ECB is due to end in October.
Oh, are we losing Michael Brown?
Can you still hear me, right?
I can hear you now. You kind of
Hello?
dropped out for me, but it might be me.
No, that's because my phone was ringing, so apologies about that.
Okay, no worries.
Lagarde's term at the ECB is due to end in October of 2027, but apparently in these discussions, the consideration was that Lagarde would take over at the latest in early 2027, agreeing to take on that role once inflation is back in line with the ECB's 2% target. Now, of course, the ECB have come out and denied these rumours, but I think the phrase "no smoke without fire" applies to this, and certainly Lagarde's career continues to fulfil the definition of failing upwards. Sticking with the ECB, as if
sorry.
Oh,
just on this is all very, very weird because, well, let's forget for a second that she is a convicted criminal.
Yes.
Right. So let's just
Funny you
gloss
mention
over that for a second. Just as we gloss over that, but it's all very weird because obviously Schwab kind of disappeared. But he's kind of out now, isn't he? As far as I can remember.
Yes, slightly scandalous exit, but yes, he is out.
This is what I mean. He's out, and no one seems to understand why. So there's some very dodgy. Well, we know for a fact that WEF, there's a lot of dodgy things going on in there, but there feels like
God, Ryan's got his tinfoil hat on.
It's a fedora, actually. I beg your pardon. It's a tinfoil fedora, but it just feels like there's something really dodgy going on here. But anyway, it'd be interesting to see if anything comes out of why, or if we get any more details on why Schwab was actually relieved of duties and had to step down. Because it's all a bit weird that this was going on apparently seemingly before he actually dropped out. So one to keep an eye on. I think that it's got the makings of a scandal.
Yeah, wandering hands probably, but we'll see what happens with that one.
No comment.
Oh no, very much an inside joke there. Moving on from that, but sticking with the vein of criminal prosecutions, not wishing to be outdone, we have had news this morning that the ECB's Kazimir, who is the Slovakian representative on the governing council, has been found guilty of bribery. Now this relates to his former role as Slovakian finance minister. Now this gets better, by the way. As opposed to the 5-year jail term that prosecutors were seeking for him, he has instead been fined just €200,000, which is probably pocket change to the chap. And if that wasn't bad enough, despite the criminal conviction and despite his term as Slovak Central Bank governor ending on the 1st of June, which is of course Saturday, because the government there haven't been able to agree on a successor to him, he's going to stay in post in an interim position for, the foreseeable future until they can agree on a replacement. So we now have two convicted criminals running policy in the Eurozone.
And this is the thing. It's not like both haven't been convicted for minor shoplifting. It's been related directly to monetary kind of shenanigans and whatnot, and they're in control of the banks. It just shows you, I think, how shallow the pool is for finding people to fill these roles.
Oh, it's disgraceful, to be honest.
Yeah. So when you're putting your name forward, that's the big question.
Well, when my brown envelope arrives and I've cashed the check, then I'll.
Why not? Every
Well,
other fucker's doing it.
exactly. If compliance is listening, that's a joke. Moving on. Moving on from that, a few bits and bobs of corporate news. Firstly, Reuters sources reporting yesterday that Shein, of course, the Chinese fast fashion firm, they are apparently working now towards a listing in Hong Kong this year. Their planned London IPO has seemingly stalled, and the firm has apparently given up on it. They are likely to file their IPO prospectus within the coming weeks. Sticking with corporate news, BP, of course, they are currently trying to grapple with activist investor Elliott, and one of the things that Elliott wants them to do is to sell off their lubricants division. No laughing at the back. Apparently, Castrol, of course, the name of the division, is said to have drawn interest from a number of firms, including Reliance and Apollo. This may fetch between $8 and $10 billion, with the firms in question weighing bids for either all or part of Castrol. This certainly won't be the last divestment that BP make as they continue to try and focus back on their core business, which is, of course, oil and gas. And lastly, a few things from the tech sector. Firstly, Tesla, they are apparently going to finally launch the robo-taxi on the 12th of June in Austin, Texas. Apparently they've been conducting some tests of the robo-taxi on public roads over the last couple of weeks, and presumably everything's gone well enough that they are happy to
You would
launch
hope
it.
so.
If it's been mowing down pedestrians and they're going to launch it anyway, then I'd be quite worried, but never mind. Sticking with the tech space, Meta, they're going to open some physical stores. This is according to Business Insider, so presumably I can now go onto Oxford Street and check Facebook on a communal computer. God only knows why they need shops, but never mind. And last but by no means least, Apple, who are absolutely by no means whatsoever out of ideas in terms of innovation. They are going to rebrand how they name their software. As opposed to just using a sequential number, they are now going to name iOS after the year in which it is launched. So we're going to have iOS 26 coming up later this year. I would imagine that if Steve Jobs was still around, they would be doing something slightly more interesting than that. But there you go. Apparently in 2025, that is what counts for development.
Well, there you go. Awesome. Thank you very much, Mr. Michael Brown. So let's read off a few of the choice headlines via the Overnight News Roundup, which Zach, who used to be called Judith Chalmers, but now that's my moniker, has put together.
Actually, on that, I must admit, I am glad you're back, because there aren't as many pictures of Judith Chalmers as you would imagine, and trying to find a new one to Photoshop every day was quite a difficult issue.
And I got to say, mate, hats off to you, because you've come a long way in your photoshopping, because I remember the days when one photo would be black and white, one would be in colour, and it'd be like...
Well, I've had
just
quite a
not
lot of
working
practice, mate.
Well, this is the problem. And may you have far more practice next week if I manage to get away, but we'll see. Right. Anyway, some headlines for you. Obviously, we've gone through the trade court blocking Trump's Liberation Day tariffs. So I'll bypass that one. Goldman Sachs see Trump's tariff block as temporary, offset by new taxes. Analysts suggest Trump's trade agenda could pivot towards alternative levies, minimising the court ruling's long-term impact on his economic strategy. He has an economic strategy? What? US tightens export chokehold, barring shipments to China without licenses. New restrictions target software and chemicals, aiming to cripple China's key sectors by cutting off critical supplies. Trump bans US jet engine tech exports to China as well, escalating the trade war. The export bar disrupts China's aerospace ambitions. Obviously, we know they've got their own giant aircraft manufacturing organisation kind of going strong there, where I think they're actually bringing in their own jets this year to be mass produced for China Air, if I recall correctly. Anyway, the export bar disrupts China's aerospace ambitions, intensifying tensions despite tariff truce talks. Japan, they are US defence equipment buying as leverage in tariff negotiations. This kind of ties in what we've said before. An easy way to kind of appease Trump, if you still need to, is energy, agriculture, as in grains, and defence spending. Japan's negotiator heads to Washington today, apparently, hoping defence deals soften the US tariff demands. UK is pushing for US for swift trade pact rollout amid tariff cut delays. Talks next week aims to expedite tariff relief for UK car makers and steel, critical for bilateral trade. This, be honest,
Well, I mean,
go on, sorry.
well, I was going to say, the first thing they need to do is actually write the bloody deal down.
Well, this would help. This would help. But anything would be good for our steel industry, which is at the moment in the shitter. And it's made harder by Ed Miliband, who is also forcing obviously the UK to use a lot of new wind turbines. But apparently the UK steel industry is only producing 2% of the steel needed for that. So it's a complete shit show on that front. But best I stop talking about it before I get angry. China's rare earth curbs threaten Indian auto production halt. Export restrictions on magnets could paralyse India's auto industry, highlighting supply chain vulnerabilities. Moving to some macro news. The House's GOP's package, GOP's tax package, balloons to $4 trillion, fueled by SALT deduction hike. That's the SALT. A last-minute deal to raise state and local tax caps inflates costs, raising deficit concerns. Obviously, we've also had Musk slagging off basically the new big beautiful bill, which is kind of ruffling a few feathers in Washington, no doubt. Bond traders brace for deeper Treasury sell-off as yields float with 5%. A JP Morgan survey signals bearish sentiment, with investors expecting sustained high yields amid fiscal worries. Japan's bond yields surge, prompting government to eye market stabilisation. That means intervention for those at the back. Finance Minister Kato vows close monitoring as foreigners, those pesky foreigners, sell long-term bonds, pushing yields to historic highs. In the UK's Reeves plans pension fund mandate to boost British asset investments. The backstop power aims to channel pension funds into US equities, countering economic uncertainty. Look, I like that she's trying
This is
to.
mental.
Well, look, this is the thing, right? Yes, make it more accessible for UK pension funds and pension funds in general to access UK equities. Don't try and force them to do it, because if you're trying to force a market, it's going to unravel and it's going to go to shit very quickly. Just make the market itself more interesting and more suitable for investment. Work on that side of the equation. Don't try and make the market shit and do nothing to help the market, but then force people to invest in it. That's the wrong way of doing it. Anyway, I might not come.
Very, very well said.
Thank you. South Korea slashes growth outlook, cuts rates to prop up economy. The central bank acts to counter tariff-driven export declines, boosting Seoul's stock market. Bitcoin ETFs, they rake in $9 billion with a B, outpacing gold funds' 2.8 billion outflows. BlackRock's ETF leads crypto surge, reflecting shifting investor preferences amid US policy shifts. Goldman Sachs, Sigma Gold, touts gold, oil as inflation hedges amid US uncertainty. Bullion and crude again appeal as havens against tariff-driven price pressures and institutional doubts. In geopolitics, US to revoke visas for Chinese students tied to critical fields. That's according to Rubio. The aggressive move targets students linked to China's Communist Party, escalating US-China tensions. US brokers India-Pakistan ceasefire with trade access offers. Commerce Secretary Lutnick's deal eases border tensions, leveraging economic incentives for stability. I guess this is kind of like, if you both play nicely, you can both access our market. That seems to be the vibe there. Japan ramps up its Asia-Pacific military presence to counter China. Destroyers in the Taiwan Strait signal Tokyo's bolder stance against Beijing's regional ambitions. And finally, before I hand back to you, just some equity headlines. Obviously, we've had, bear in mind, prices aren't door numbers, so don't shout at me if it's no longer 5%. But NVDA surged 5% after beating Q1 estimates despite $5 billion China hit. Strong AI demand drives NVIDIA gains, though export curbs dent its China market outlook. As Michael said, Tesla's robo-taxi service is to debut in Austin on June the 12th. Elon Musk's driverless vision takes shape, positioning Tesla as an AI mobility leader. We'll see if that really
What a
does
load of
happen.
rubbish.
Yeah, I'm not.
You know who?
Go on.
You know one of the firms behind the robo taxi, though, don't you?
Go on. Oh, don't. Is
Pony
it Pony
AI.
AI? Is it Pony AI?
It is. It is.
Yes. Right, I'm all for it. Right, let's get involved. I'm very bullish robo taxis all of a sudden. Salesforce boosts sales outlook, riding AI-driven earnings wave. Robust Q1 results highlight AI's transformative impact on cloud software giants' growth. HP shares dive as tariff pressures force price hikes, production shifts. The tech firm is scrambling to move manufacturing from China to dodge Trump's import duties. Chevron to cut nearly 800 Permian Basin jobs, slashing oil operations. Layoffs reflect cost cutting in the world's top oil producing region amid market shifts. kind of completely off topic here, but they're not that off topic. I started watching Landman whilst I was away. A very, very good series for anyone that's interested in that. Definitely give it a watch. It's on Paramount, I believe. Anyway, moving on. Foxconn lifts revenue forecast, defying earlier cautious outlook. The electronics giant optimism boosts confidence in global tech demand recovery. And finally, for me, before I head back to Michael, Toyota's global output rises, fueled by hybrid demand and tariff rush. Strong US sales and pre-tariff buying drive Toyota's fourth consecutive monthly gains, their foot firmly on the accelerator pedal.
Motoring higher, aren't they?
Motoring, vroom vroom.
Oh dear. Right, thank you, Ryan. In terms of today, then, of course, market participants continue to focus on the fallout from the court ruling that we had earlier on and that we've already covered. Of course, all of the lawyers, both amateur and professional, will be publishing a million different pieces of research to wade through as the day progresses. In terms of calendar and scheduled events, though, the European session is a relatively barren one, although we do have a few bits and bobs worth noting as we move into the North American session a little bit later on. At 1:30 this afternoon London time, we get the second estimate of first quarter GDP out of the United States. Now, I wouldn't usually mention this or be particularly bothered by it, to be completely honest with you, but I do think there is the potential for the data to have a more sizable revision than we would typically tend to see, just given the huge volatility and uncertainty associated with trade flows, particularly imports into the United States in the first quarter, as we saw businesses front-running those tariffs. Nevertheless, sell-side consensus does see that print remaining unrevised at minus 0.3% on an annualized quarter-on-quarter basis. Also at 1:30 this afternoon, we have the weekly jobless claims figures from the States. Initial claims in the week to the 24th of May expected to have held broadly steady at 230,000, while continuing claims for the week ending the 17th of May seen falling to 1.89 million for a prior 1.903 million. Of course, do bear in mind that the continuing claims print, that does pertain to the May non-farm payroll survey week, and we get that May jobs report next Friday lunchtime. Also out of the States at 3:00 this afternoon, we have the latest pending home sales data, with sales seen falling by 1% on a month-on-month basis in April. In terms of other things to focus on, as I mentioned earlier on, we do have Treasury supply later on, a 7-year auction out of the States at 6:00 this evening. We also have a few Fed speakers. We're due to hear from Barkin, Goolsbee, Kugler and Daly as we move through the day today. Also due to hear from remarks from the BOE Governor Andrew Bailey and Deputy Governor Sarah Breeden, who'll be speaking this morning. And lastly, on the earnings front, I would say probably the bulk of Q1 earnings season is done now that NVDA is out of the way after their report yesterday. But nonetheless, before the market opened today, we do hear from Foot Locker and from Best Buy. And then after the close, we hear from Costco and from Dell. And for the time being, that is your lot.
Wonderful. Well, it's good to be back, Mr. Michael Brown. It's good to hear your voice. And also,
Indeed it is.
It's good to feel like you're getting angrier and angrier almost with every show, and I feel like I'm creating.
Well, I've had a week of bottling it up inside.
It's not. It's been quite a few of our friends have been saying to both of us that maybe Ryan's created a monster, and I'm quite happy for that. I am the Frankenstein. You are the monster. Well, dear, indeed. Right. Anyway, thank you so much, listeners. Sorry we've been away. I've been away. Hope. It really is. It really is. I take full responsibility. I hope it's been worth the wait, though. Whatever you're doing today, stay safe, keep it tight, and we'll see you all tomorrow.
Indeed. Bye for now.